All right, let's move into the Cromford report.
Okay, yeah, let's look here. She's changed the format a little bit on this, but
I enjoyed it.
Really good information. Yeah.
Pretty good.
Yeah. Start us off.
All right, well, inventory is still below February 2019. So
yeah.
The supply, she has it at 17,480. I think I might have a little bit different number as of this morning. I just did it.
I think that might have been a February number.
Oh, okay, yeah.
Because we're lower now.
Oh, that's right. Yeah, that's a February number.
Yeah.
So that is the fourth lowest in 18 years. So a lot of people are going, oh my gosh, I'm seeing for sale signs everywhere. It's still extremely low compared to what you are used to seeing, and certainly what we were seeing during the recession. The lowest, ironically, this is the fourth lowest. The lowest are the last 3 years. So we are seeing some increase, but we're still, the last 4 years have been the lowest ever recorded as far as inventory.
Lowest in supply and fourth lowest in demand as well.
Yes, they're running in parallel, which is why we're not seeing the crash and that big window of huge inventory, no demand that we had during the recession. They're running parallel where the inventory is low, but so are the number of transactions. So that's also the fourth lowest number of listings under contract.
So we've titled this episode Foreclosures. Are we going to see more? Let's talk about that.
You know, it's very popular in social media to make things very dramatic so that you'll click on them.
Yes.
And one of the ones
Clickbait.
you see a lot is foreclosure
Foreclosures
explosion.
On the increase. Yeah. Well, let's talk about that. Let's talk about those numbers.
Foreclosure explosion? No. There are 321 pre-foreclosures. Now remember, pre-foreclosure happens automatically where after 90 days of past due, the 91st day, it automatically goes into foreclosure.
Right.
However, the number of homes that actually foreclose is way lower than that. The actual number, 34.
34.
So.
And that's for February?
February.
Okay.
So,
Not
just
very many,
to kind of
folks.
see how the drama gets built in these media posts, you could say foreclosures spiked by 500%.
Oh my goodness.
If that happens, that means we would have 170. Which
That's
again,
still not
when
very
you're
many.
looking at the graph of sales, it would still be a flat line along the bottom of the graph. You wouldn't even realize it was there. So just when you're reading these things, seeing these reports, make sure you dig a little deeper and look behind the curtain
and check your
a little
source
bit.
and
check your
actually
source and
see what numbers, where they're getting their numbers
are they
from,
crunching numbers together to only look at a segment to make it look disastrous?
More dramatic. Yeah.
You know, so.
All right, moving on to more stats here. Rental supply. Rental supply is flat.
Yeah,
Looks
basically
like
flat.
you
She made a funny comment. The only thing crashing in rentals is landlord expectations.
Ah, yes, there we go. And that being the list price, median list price being $2,200, median closed rental rate at $2,100.
So tenants
high.
are
That's
getting,
high, but
doing some negotiating and getting a little better deal.
That's good.
That's great.
That's good. We are back in skepticism, looking at that market cycle.
The emotional meter.
Yeah,
That's what I like to call it.
Went into despair, and we were in despair in November and skeptic in December, and then back into despair in January, I believe. I got to get my cycle out.
And now we're back to skeptical. So it kind of did a little boop, 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 and now we're back up again. So the next level is hope. So let's hope that's where we get to. Right.
All right.
All right, inflation.
inflation,
Dang
yeah.
it. 6.4% in January, and the PCE came in at 5.4. So basically what that's doing is it's pushing the prediction back. We were originally looking at a March to May time frame of when we might see that 2% number achieved, but we're now looking at probably June.
Yeah, so the CPI is the 6.4%.
Right.
So, and if we follow the train with where we've been going with that number, yeah, May to June now is the prediction for the 2% annual inflation that the Fed is pushing so hard for.
Right.
And the CPE is at 5.4, as you said. And so again, we're at June, folks. Unfortunately, that's the bad news of this.
Inflation report tomorrow could dash today's rate drops. Well, it did not. So this morning, the U.S. stock opened sharply higher after February inflation data matched estimates and suggested pressure on prices continued to cool.
Okay.
The numbers could ease Wall Street worries over steeper incoming interest rate hikes from the Fed Reserve at the time when the banking sector is regaining its footing following the collapse of two regional banks. So
Okay.
the bad news and bad news, it's going to result in probably some good news, and that the Fed hopefully will only increase the rate by 0.25.
0.25%, yeah, versus 0.5%. So that is good. That's what we want. Less impact on the mortgage rates, but
So currently, across the valley, we are still in a mild seller's market.
yep. And I smile because we're going to discuss what that means to you, a buyer.
Okay, we're currently in flat appreciation territory, but we expect to see appreciation begin to start picking up a little bit.
Yeah.
Here.
Contract ratio across the valley is 62.6%. Under contract listings, 8582 as a count. Active listings at the time she did this, which was March 11th, was 13,706. It's actually pretty normal for this time of year.
Right. You compare that to 2019. Under contract was 10,634, so
Definitely higher.
Definitely higher. However, the actives were equally as high at 18,177. So you
So
were
the contract
5,000
ratio
higher.
was very close. Contract ratio was 58.5.
Right. So it's
So we're
almost
good.
the same as we were in 2019.
Right. But we're not predicting a buyer market anytime soon.
So there's some great advice that Tina gave to home buyers and sellers. The best time to buy is at the beginning of a seller's market. So if prices are just starting to go up, so you get in right at the beginning when those prices every month are going up and your appreciation is going up every month. The best time to sell is on the downside. So you've already peaked, so go ahead and jump on the bandwagon then and go ahead and get sold as you're on a downward market. So you sell here, your home is worth a little less here and a little less here, so you hit that point where you
looking
do well.
on a microcosm here, Peoria, the Cromford Market Index is at 127.8, showing trending up still.
Okay.
So the change is 23%. Last month we were at 104.2. So it definitely increased further into a seller's market.
Right.
Surprise has the same trending from 105.4, or they were at 96.1. Now they're at 105.4.
So they went up slightly, but they're still
They went up
basically
slightly.
balanced. The two buyer market areas are Maricopa and Buckeye.
Buckeye, yeah. Yeah, Goodyear is almost in a seller's market. It's a baby seller's market, like we said last week. Baby seller. Chandler is hot.
Yeah, they're
Hot
crazy
to
hot.
trot. 202.6.
Yep.
They're going nuts over there in a seller's market. So,
Okay.
all right.
So iBuyers are still sellers. We're not seeing much iBuyer
No.
purchasing activity, but they are working their way through their inventory. Same with short-term flips. Those are definitely on the decline. We're just not seeing a lot of activity on that right now.
The market share through January was 73.9 for owner occupied. Second home is 10.2. Investors, to your point, is 14.5, and iBuyers is 9/10 of the market.
Wow.
Less than a percentage of the market is what iBuyers are doing right now. So
keep in mind that investor number of 14.7 is also going to include long-term investors.
Sure.
So
yeah,
the number of fix and flip is probably closer to what the iBuyer number is, which is 1%. So
yeah,
is my guess.
yeah.
Okay, you do expect to see a big rise in FHA loans because they have reduced their private mortgage insurance by 30%, right?
By 30 basis points, yeah.
30 basis points. Okay,
so saving some homeowners, it will, new loans. I don't think it applies to previous loans. I think it's just new loans. A couple $100 a month.
That's huge on a month after month after month basis.
Great. Yeah.
Absolutely. So basically, we're talking about inventory levels remaining low. Basically, sellers are responding to interest rate increases by not listing.
Yeah.
It's just, it's not worth selling your home when you're sitting on a sub-3 interest rate and knowing you're going to have to go to a 7% or 6.5%.
Since the beginning of the year, in fact, we're down in new listings 17.5% in new listings.
Year over year?
No, since the beginning of this year.
Oh, since the beginning of this year. Got it.
Yeah.
Right. Okay.
Yeah. Price reductions are declining. 14% of active listings had a price reduction. And then the median price reduction is still at about $10,000.
So, yeah, price reductions are actually moving down. Sorry, crisis predictors. I'm not going to fly
32 days are the median days on market prior to getting a contract. We've been talking about average days on markets for active listings. So we have to actually look at how many days it took for a listing to get an offer. That's only 32. It's not that bad. All right, so median sales price has reduced down to 422,000, down $58,000.
Since when?
Last year.
Last year, this time?
March,
Okay.
yeah, 2023.
Okay, so this is year over year.
I'm sorry, since the peak. These numbers are since the peak.
Since the
May
peak.
2022 was the peak.
Okay.
So we're down 58,000 since the peak.
Okay.
Okay. Sales over asking price is down 39% to 16% of all listings go for over asking price. Not very many.
Not happening very often.
Used to be 55% back in the peak. Seller concessions were at 12%. Now they're at 48%.
Yep.
48% of all transactions have some sort of seller concession.
And how much are they?
We're averaging about 10,000.
And where were we at?
Or no, 9,000, I think.
9,000
Yeah.
we were at.
3,500.
Wow.
That's the next matrix.
It's a lot of coin.
Mm-hmm. Sales price to list price late ratio was at 101.7.
I remember that.
Music,
now we're back
to the seller's ears.
Yeah.
Now we're back to 97.3.
Which is pretty normal.
So that's 2.7 below the asking price. Median days on market prior to contract. Oh, it cut off. I apologize. I don't have what it was in May. I don't think it was very long though. Well, here we can tell you it was 7 days because it's 32 days now and we're increased by 25.
That's right. I remember the 7 day
there it is.
average.
I had to shrink it. There we go.
Crazy.
Yep. So as a summary, inflation measures increase, pushing 2% goal further out to May or June if they do not decline. Of course, that's if they do not decline.
Mm-hmm.
Things could get better. Greater Phoenix is in a seller's market. However, owners with a 2+ years in ownership still have significant profits. Still close with significant profits.
Right. Home equity is still strong.
And the bad news is for the next 2 to 3 months, year-over-year appreciation rates will be negative.
Yep.
We know that because
We've
we're
talked
building
about
up
that
to
a
the
little
peak,
bit.
right? We're building up to May 2022, and that was the peak, and then prices started declining. So that's,
Once we catch up with those declines, then
Right.
when we hit that peak and start going down, then everything will start coming.